Who's gonna win if the housing market crashes? What's going on, everyone? Adam Swartz, your top real estate agent. If this is your first time to my channel, every single day I drop a video about real estate. So if you're into real estate, make sure you hit that subscribe button. On today's video, we're going to talk about who actually is going to win if the housing market crashes. All you buyers out there that are waiting for a housing market crash, let me tell you the truth of what it would really look like when the market crashes, because I don't think it's what you think is going to happen. Obviously, right now, everyone who's hoping for a market crash are buyers that think the housing market's overinflated. They keep getting beat out on houses. They can't afford housing. So they're like, oh, I'll just wait for the market crash and then I'll buy a house. Well, let's break down what will really actually happen and what actually happened last time. Say houses right now are at 650 and we see a 26% price drop down to 500, right? We've obviously seen that inflation has affected renting too, and renting skyrocketing too. And if all these people are selling their houses and having to move out or losing their houses, what are they going to become? They're going to become renters. We already have no supply of rentals. So when all these people allegedly are going to come onto the market, what is that going to do with the rental prices? It's going to jam up rental prices. So say the average rent for this house right here is $3,000 a month. So that's $36,000 a year. So if the market goes down right there, who are going to be the ones buying up the houses? It's going to be investors. We've already seen stories like BlackRock and major companies like that buying up blocks and blocks of housing for rental money to make more money. So let's break down the numbers really quick. So say I have an all cash buyer that pays $500,000 for this house and my rent is $36,000 for a year. My cash on cash return is 7% on that 500 grand. That's really good. 7% is a great return on your money. So say someone's only putting 50% down on that house. Say it's $250,000, your cash on cash return is 14.5%. So if you're a seller and the market's going down and you have to sell your house, who are you going to sell your house to? Are you going to sell your house to an all cash buyer, or are you going to sell it to someone that's only having 3.5% down with a 600 credit score? And remember guys, when the market goes down, lenders suck up lending, and so they raise your credit scores, they raise all those things. So if you can't buy now, sadly, you're probably not going to buy then, because I don't think, one, we're going to see a massive amount of houses hit the market like we saw last time. And if we do, prices are still going to be okay. Like $500,000 is still a good price. Banks aren't just going to massively throw thousands of houses on the market. They're slowly going to drip them out. And also guys, foreclosure takes over 200 days. So this isn't going to happen overnight. If this flood happens, we're going to be waiting a while. Remember, real estate doesn't go straight down or straight up like the stock market, more of a rule. So if you're hoping for a market crash, just let you know, who's going to be the ones competing against you are going to be investor, all cash, companies that have trillions of dollars, and they're gonna beat you out then, because you're gonna get better cash on cash return than they are now. Remember that, the market crashes, the only people who are gonna win are investors.